Hi. I've posted quite a lot in the comments, etc., on LinkedIn in the last few weeks around remediation of ERP, making the assertion that it is possible to dramatically improve functionality of an existing ERP. And I've referred repeatedly to something that I call precision configuration. And I thought it might be useful just to share that with you. So I'm going to talk about that briefly, just to give you the headlines. It's a big subject, and I will give you an invite at the end to my executive briefing where I'll go into this in a lot of detail. So as a metaphor for precision configuration, say that you're doing well, you buy a really nice house, you want to hang a front door like that, and so you need some screws for the hinges to hang that door. So you go to the local hardware store and you expect to find the screws neatly arranged in racks so that you can just go to the shelf and pick off the screws that you need and go and pay for them. Instead, you find a shop assistant who tips out a barrel of fasteners and says, look, I'm sure the screws you need are there. Here's John. He's our consultant. He's got 5 years experience in looking for screws, and he's only $125 an hour, and he'll help you find the screws you need. Would you pay the $125, or would you turn on your heel and go somewhere else? So the question is, why do you do that with ERP? What do I mean? Interview with the chief executive of a FTSE 100 company, over 60,000 employees, big SAP implementation. Norman, how would you rate SAP? James, at an operational level, I'd give it 7 or 8 out of 10. The business is running well. At a strategic executive level, I would give it 1 out of 10. I have 4 senior accountants with teams supporting them who spend 3 weeks a month in Excel to produce the board pack because we can't get what we need out of SAP or out of the data warehouse or out of business objects. Started to investigate, and here is the chart of accounts, or a piece of the chart of accounts. Medicine, scraping, loading, dozing, ripping, drill steels. Absolutely no logic, no structure. Some are very big, some are relatively small. Absolute rubbish. And that's what I mean with the image that I've got on the left there and what I've used in the metaphor. This is an extreme case. I have seen worse. But the majority of charts of accounts, the majority of item classes, etc., are closer to this than they are to what I'm going to show you in a moment. Same client material group, absolutely no logic, aircraft, jet engines, bicycles, conveyor, idlers, all lumped together. This is why 4 senior accountants with teams, 3 weeks a month in Excel to produce the board pack, which should just come at the click of a switch out of the business objects. The alternative, what I call precision, and this is what it looks like. Note the indents, the hierarchy, reflected in the indents, mirrored in the dots in the codes on the left there. The capital letters are not for posting, they're for logic and structure. The lowercase, the proper case, are for posting. And there's a whole body of discipline and standard that go with it that I certainly don't have time for today. What that gives you is something that respects Miller's Law if you do it correctly. Basically, the cognitive span of the average human being is 7 plus or minus 2. If you've got more than about 9 slices in the pie chart of 9 levels in the hierarchy, it gets confusing. And if you've got less than about 5, it doesn't tell you very much. So the optimum is about 7. If you've got that, it allows you to very easily and very quickly analyze, interpret, and drill down step by step. And what that looks like in practice, this is done in Excel just for the purposes of demonstration. So I've got the roll-up of my financials, and I'm using the chart of accounts here, but folks, this applies to any table, item class, product class, customer class, supplier class, whatever the table, or user-defined fields as well. These principles apply universally to absolutely everything. So here I've got my chart of accounts rolled up to summary, double-click, drill down, double-click, drill down, double-click, drill down, double-click, and I'm down at my posting level. So folks, very, very easy to use, very easy to write reports on, and very, very powerful. And it's a world of difference to where the majority of people spend their time in their ERPs. The end result of all of this, if you take it to its full logical conclusion, is the cubic business model, which relates to the general ledger chart of accounts, the dimensions, and all the related dimensions and modules that tie into this: products, assets, accounts, people, etc., all converging. And the diagram is obviously very simplistic. There are a whole lot of hard concrete rules that apply to how you structure these things, which I've learned the hard way over the years. And I'll talk a little bit about that at the executive briefing. So what have we got? ERP Precision Configuration, very substantial topic. Please attend my executive briefing, why your ERP is not delivering, how to fix it. It's free of cost to my contacts on LinkedIn, and there'll be a registration link in the comments below. With Precision ERP Configuration, if it's coupled to small pieces of clever bespoke software and clever BI models, it adds massive value to any ERP. I guess it's difficult to see in such a short presentation just how much value it can add, but it's there. Read about the ERP Doctor, ERP Accelerator, Remediation and Implementation methodology on the page that I'll also link below. If you've got any questions, please drop them in the comments, and very happy to get on a Zoom call with you if you're really interested. Thanks so much.